Good morning, Trade Pros. Welcome to our morning market update for Thursday. Thursday, November the 13th of 2025. I'm just kidding. I knew what day it was. I thought it was being funny, but I'm not. The only downside of spinning around is you have to adjust the camera and stuff each and every time. Every darn morning I'm adjusting. I hope you guys are good. I finally fixed the audio, I think. You guys tell me. I do see two lines now on the audio output, which indicates left channel and right channel, which indicates that it's mono sound. It's still a mono source. A microphone is mono. It has one channel, but it is summed into what you should be hearing out of both ears. So thank you to FX Rookie for the heads up. I'm sorry, bro. If you're still around, it took a while. I apologize. It wasn't just you. It was me. And it's funny because I used to be in music production and I didn't know. I couldn't cue into the fact that it was just coming in mono, left channel. Duh. Thank you also for our boy Robert at TRADEPRO that suggested the fix. So here we are. Anyways, everything's fixed. We're moving forward. It's a day of resolution. My mic is fixed and the government shutdown has concluded. All right, global tone is slightly muted though. Every market's kind of flat, not really too much excitement. Gold's up 0.8%, near 4,200 now. WTI, which is oil, is up 0.5 percentage point, and dollar's a little weaker this morning. After government reopening, put the downward pressure on the dollar. All right, Bitcoin's up 1.2%, Ethereum up 2.6%. On the macro front, this is where we get the big news of the day. The U.S. shutdown is officially over, ladies and gentlemen. It passed the House vote. It went down to Trump's desk. He signed it. He inked it. It is official. The government shutdown is over. The longest government shutdown on record, 43 days. Longest ever, exceeding the past one by 35 days. So it sounds great. Everyone's excited. And then you start to think about what I talked to you about last week. And I forget what the title of the video is, but we said the government might reopen soon. And we expect the flurry of buying to happen. But then we said the way it would look is buy the rumor, sell the news. Upside momentum, and the most upside will happen before it becomes news. And once it becomes news, the upside isn't going to really pull through as much. You might even see selling today because now that it's become news. But it doesn't mean that midterm, in the next couple of days to weeks, it won't be bullish. It's still a bullish event. Just don't expect it to be bullish when it's announced. Buy the rumor, sell the news is probably the number one thing you should learn when you're trading. Probably not number one, but right up there with one of the most important. All right, so it's over. Trump signs the bill, but we may never see October CPI and jobs data ever in our lifetime. All right, they may not go back and recalculate it. In fact, it looks like more increasingly likely that it will not be calculated. It will not be released. We are just missing. There's a void, a gap in the chart for October jobs data and inflation data. All right, that's fine. It may never be released. All right, Hassett warns Q4 GDP could also slow to 1.5% to 2%. Full year GDP near 2%. All right, Fed's Collins said he's hesitant to ease further. And all of this government shutdown stuff, we may be in the same situation again end of January coming up. All right, so this is kind of pushing us through the holidays, get through the holiday travel, and just write down in your book of observations, life observations, what ended this shutdown. What ended it? Put it in the comments. I'd love to hear from you. I'll tell you what ended it. It was when it came down to one thing, how quickly everyone started getting into votes and crossing the line saying, I'm going to support it too. Democrats jumping over. Everyone started, a light going on with cockroaches. Everyone started moving really fast and the deal got done. What triggered that? Air traffic controllers. You don't want travel to get lopsided. Right during the holidays, right? Travel plans, spending plans, consumption. I'm willing to bet you the CEOs of these big retailers are on the phone with legislative branches every single day. Saying, guys, what the heck are you doing? Do you want this check for your next campaign or not? Open this government up so I could make my money during this holiday. In fact, Black Friday is coming up. That's why they call it Black Friday. It isn't a statement. I almost got in trouble. Black Friday is Black Friday because companies wait a whole year and some of them go into the black, aka the profit territory, and stop bleeding money, aka the red side of the book. they go black, aka they get profitable this time of year. It takes them all year to flip to green, especially some retailers are struggling. So anywho, that's what ended the shutdown. Remember that for January 30th. All right, it's going to be interesting. Let's see what kind of battle we get then, because this is when the bucket is kicked down the road to. It's not that far ahead. It's just a temporary funding bill until the end of January, and I think this kind of cuts the excitement on the market. All right, let's keep going because I got so much stuff today. Fed's Daily, who is a 2027 voter, says uncertainty has come down quite a bit, but in the U.S. economy, quite a bit in the U.S. economy. It's a typo here from the news source. Premature to say, definitely a cut or no cut in December. So he's not really giving us any context. But he does say U.S. has cautious optimism and still has work to do to bring inflation down to 2%. We don't know how much we have to bring it down to because we're missing 1 month's full report. All right. Next thing I want to talk about is, do I want to talk about this? Well, I wrote it. I'll talk about it. Is a $5 trillion AI funding shock. The news and the talk out here from everybody is that AI is a bubble. All of a sudden, AI is a bubble. All right. And going back to a couple of weeks ago, AI was the next best thing and it was going to change the world. So what's happening here? All right. Two things I suspect. Number one is a lot of these institutions holding the position are starting to have liquidity fears of it. And I also think a lot of people who want to get into it think it's too late to buy into it. So could it be a manufactured sell-off, a news-driven fear of an AI bubble to get better entry points for the long position? I don't know. You know, you tell me. Do you think the news acts in honest regard to everything? Do you think the news and the news cycle there is no control and manipulation around it by powers that be? I think there'd be an interest for some people to want to control the narrative in the news. I don't know. I'm not smart enough to talk about this stuff. I have no idea. But I'll tell you this. It's a weird timing. Yes, the AI bubble is... The conversation around AI bubble happening right now is a curious thing, but these things existed from the very beginning. We knew AI would require astronomical resources to see if the bet pays off. JP Morgan this morning is the next after... what was the bank that we talked about just a couple of days ago? Dang, this old brain is forgetting. It's a second bank, major bank, to ring the bell. And they warned that the global AI build-out will cost $5.3 trillion over the next 5 years. Deutsche Bank, that was a bank. All right. And it said data centers alone will need 122 gigawatts of new power, which is roughly 100 nuclear power plants worth of capacity. All right. A scale that the current grid can't yet handle. We're addicted. We need power. All right. Well, here's the thing about all this. All right. This point in time of the AI development curve was known at the beginning. We knew it would go parabolic, whatever. All right. We knew that it would just flip upward with the energy demand. Now that we're here, everybody is shocked. And well, the interesting thing is they say they expect the AI debt bubble to surpass U.S. banks' total credit exposure by 2030, right? That's huge. That's in 5 years, the AI debt will surpass the U.S. bank's total credit exposure. All right. If AI revenue falls to meet expectations, it could trigger a global crossing 2.0 moment. All right. The bank warns that AI boom can't last indefinitely, and if something can't go on forever, it will stop. Right? I mean, look, at least JP Morgan is a little more neutral about it. You know, they're a little more realistic about it. Whereas Deutsche Bank was just fear mongering. Look, it's true. All of this stuff is true. We're at an intersection that was part of the journey to begin with, and now that we're here, to be shocked to me is the more shocking part. A couple stocks in play. SEE up 21%. That's a nice pre-market mover. Somebody suggested I cover a couple stocks. I said, sure. CSCO is up 7% on earnings per share and revenue beat. Baba is up 4%. They overhauled their AI apps. FLUT is down 2.5%. DLTR is down 3%. And Disney's down 4% as well. Revenue fell short. And profited. The TV unit fell 21%, and income from ESPN slipped too. Look, people aren't watching as much TV, all right? And to me, like, I wear this jersey, but I've watched the least amount of Leafs hockey ever. Like, it, I mean, for my own reasons there. Let's jump into the market stuff. Let's turn around and talk about charts. I want to look at your comments too, and let's build the plan for today. All right, so I'm going to turn around. I love that camera just has a little shutter. I also love the sound it makes. Morning, MS. Morning, J-Rad. Prashant, what's up, my brother? Let's get it going. All right. So first and foremost, I want to show you guys the put and call walls. Call wall is clustered around the 69.10 level, and the put wall is around 68.30. That's the heaviest volumes. All right, so I basically marked these levels right here. They should be the opposite, which is fine. We'll change the color. That's a small mistake. Color. All right. So this is the put wall support, call wall resistance. I just put them on there on the bigger chart just to have something visual. But today's market, all right, yesterday we kind of pushed to the highs. Yesterday was peak optimism, I would say, on the shutdown. And today's market, the way things are looking is big overnight drive. So essentially the current price and the overnight low is below the prior day low. So this is kind of the first day we set up that bearish structure. The prior day cash close is below the market open of yesterday on the US session, and the overnight high is below the prior day high, all right, which is up here. So everything, both the highs, both the lows, the cash close compared to the opens are all pointing lower. So it's a bit of a bearish sequence day and event. All right, the interesting part is going to be, like Ludacris said it, how low can you go? Where is this pullback going to be? I have some levels. The 40 is a really good one here, okay, but will this low hold? Will this low hold? You know, this gap hasn't fully filled. Will this gap fill? Will we get all the way down 67.30? The real question is that, and the answer is I don't know, but we have no other option but to play the nearest one for the day trading session. So I'm going to say the 40 here. If I go pointer, chart value crosshair, yeah, the 40 down to like the 30 level. It's a 10-point band. I like it closer to the low 30s, but if we get an order flow moment down here, then this pullback may very well lead to the upside. So I will be looking for a long in this area, in this structure in today's room. All right, anything below the 30, I think we see selling down into the 6,800, which is a 30-point level. So this is kind of the trade plan and the cluster for today is this line. Can't even draw it straight. Upward expansion or anywhere below the, we'll give it a little bit of space, like 25. Below here, 20, 25-point move down to here. Okay, and the battle happens all over again down here. So today, all we can do is really compartmentalize the market and give it a shot. But one thing you will also notice is that I can't move the chart right anymore. That's one thing you'll notice. Try not to notice that too much. See, our charts on Mac is an issue with crossover, just so you guys know. It's not an issue. It actually runs really solid, but the scaling and stuff is annoying. Okay, so if you ever thought about doing it. 68.90 is a very clear resistance. So even if you're long off these, 30s, you have a 60-point move. That's a lot of headspace. I'm not saying you're going to get that full move, but that's the play there. All right, that's the trade. That's what I'm planning to do for the S&P 500. It's very simple today. Come down to support structure near the 30s. Try to get the order flow level forming on one of the charts and take the shot off of an order flow level. And if an order flow level reveals itself in between the levels, doesn't mean I won't do it. I'm looking for the first order flow setup and play that comes up today. You guys have any questions before we call it? And also, what else was I going to say? Forget what I was going to say. Also, the challenge on Mac is, see these little windows? Like, they're supposed to be all the way down, but then there's a taskbar that comes up and it pushes it up. Like, Mac wasn't designed for traders, to be honest with you. It should shock nobody. Okay, well, I gave it a couple minutes. That's the play. That's the plan. The government officially reopened. Let's see what that means now for the price and the market, and I think it's gonna be a bit of a choppy session today. Get ready for it. Get prepared for it. But I think low mid to low 30s are great support structure, and if we get down there, which we're on our way to, I think is probably the best opportunity today. I'm gonna take it a little bit easier today, just because it's the first day the government's reopened. I'm going to let the market settle, the dust settle a little bit, and I'm not going to force or overly complicate or push things. Going for some base hits to get on base. Prashant, I get the call wall and put wall stuff from my morning market update notes. See? Call wall, put wall. But I put that into the notes. So I guess that's what you're asking about. It comes from Interactive Brokers. You're looking for options analysis, and it's open interest. You need open interest. You don't want to look at volume. You want to look at open interest, and then you see where you're getting the most amount of open interest positions in the next 3 expiries. The front 3-month expiries. And then that creates the walls. I see people looking at it for longer. I don't really care for it for longer. I think the shorter term, the better, because it's more positions that are incentivized and forced to make a move. All right, that's what I got for you guys. I hope you enjoyed today. The government shut down. Doesn't mean we have to get crazy. Don't get excited. If you work hard to not get excited today, I think it's the best bet. Give it some time. Let the market open. The first 10, 15 minutes, let it settle. If we get our level, we act on it. If not, there'll still be good opportunities for that order flow trade. I'll be looking for it. But if it's not at a key level, I'm extra cautious and patient because I don't want to overfire too many shots. But that's what we got. All right, Prashant, see you in the room, buddy. It is based off of futures options, yes. Because the reason I like it based on the ES futures options is because number one, I trade them based on strategy I'm running that's more long-term. I'm always long the ES. I hold it for the full quarter. When it expires, I buy it again. I defend it with options. So that's reason number one. Reason number two is trade the ES. So I want the level to correspond to the ES. And the last reason is they're very similar for the ES and the SPX. There's only a few times different. But it's a great question, Lewis. I love you guys, and have yourself a great rest of your day. Thank you. I'll see you in the trading room.